It may be difficult at first, but everything is difficult at first. Miyamoto Musashi. Our job here at chartingwealth.com is to make sense out of price movement. You know how we are not fans of the financial press, of the financial media, who I think their job tends to be more about sowing confusion than helping people. If you are focusing on the news every day to try to get your tips for trading, you're acting like a fool. What you need to do is focus on price movement, and that's the only thing we pay attention to here at chartingwealth.com. The main thing we look for are weekly vertical crossovers. Those are the golden lines that you see, the vertical lines that represent weekly vertical crossovers, which are when the price percent oscillator crosses over the red signal line. That is the most important telltale sign of a change in investor sentiment, either up or down. When we look at the COVID crash, we saw it occur. We saw it happen. We saw it coming. We talked about it, and it continued on as the bottom dropped out of the market. Then, once it corrected, stabilized, and there was enough solid up movement, our jumping in point on the S&P 500 was somewhere around the 286, 287 mark. And of course, where is it now? Now, we did have a 2-day recross that took us out of the market for sure, but then got us back in. You'll see that here in a minute. But for those of you that are new to the channel, to understand what we do, here's what you need to do. Go ahead, go to chartingwealth.com, sign up for free for our daily reviews. In those daily reviews, every day you will get a special training. There's also training available at the website and particularly at our YouTube channel. All of our training videos are detailed there. We also have a book that would help start you off right. The second edition of Charting Your Way to Wealth. Wherever you live in the world, we'll mail that book to you. Follow the link in the show notes. We'll get you an autographed copy out immediately. But again, what we have to do is focus on price movement. It is a radical idea to focus on price movement. Not really, but it seems like it is in today's world. Why? Because people talk about everything else but what's actually happening. That's all that really matters, in finding patterns, finding trends that you can trust, either up or down. Yes, you can even make money when the market goes down. We want you to practice trade inverse funds. Learn to trade puts and calls. We have a 3-part training session on options made simple the Charting Wealth way. It is available to all of our Patreon supporters. Check out Patreon. Soon as you become a Patreon member, we will fire off to you in rapid succession all 3 of those option training vignettes. There are 3 videos that really help cue you into things. So let's jump into these charts. Yesterday, everything was up. Today, everything is down. Now, what does that mean for us? Well, as we focus in, you will see. Look at first the weekly chart on the S&P 500. So far this week, the high, 339.61. The high last week, 338.28. So we've reached a higher high. We have a green up candle, only 3 days into it. It is above the weekly trend line and above the 2-day trend line. We can see on the price percent oscillator, it's losing a little bit of its angle going up. Derivative oscillator still moving up. 2-day chart, again, reached a higher high. It was down for the day, 0.46%. It is hard for me to see that, 0.45%, just because of some of the reflection on my screen. That is my fault. So what do we see going on? Well, we see prices above the 2-day. This 2-day candle has completed. So we see that the price percent oscillator is just a little less than flat. Derivative oscillators lost some momentum also, but again, still positive. Now we look at the 4-hour chart. What do we, or the half day, it's a 195-minute chart on TC2000. What do we see there? Well, we saw that we had 3 days of, let's see, that's about 2.5 days of up movement. But then in the afternoon, things rolled over and headed down. We never had a crossover on the price percent oscillator, stayed negative. We've been talking about that. Derivative oscillator didn't manage to cross over either. And a lot of, I guess we would explain that as volatility there at the end of the day. We see that price dropped all the way down to almost touching the 2-day trend line. So again, had some significant weakness at the end of the day. We'll be paying attention to that. 4-hour chart, again, can lead the way on changes, but it is not dispositive for us. What is what's happening on our bigger charts, the 2-day and in particular the weekly. 2-day is weakening, hasn't crossed over going down yet, but is weakening. We'll see what we see on these next 2 days. That's where we are on the S&P 500. Now the Qs, let's talk about it. Down for the day, 0.67%. We do have a green up candle moving up higher high, like on the S&P. Price percent oscillator still moving up, not as strong as the S&P, but still moving up, and derivative oscillator much weaker. We go to the 2-day chart, and we do see where, again, the derivative oscillator gaining upward momentum, but my friends, we were hoping for an update that would or could have pushed the 2-day into a recross position. But look, it tried to do it back on the 2-day candle ending Friday the 7th of August, not enough. And tried to do it on this latest 2-day candle ending Wednesday the 19th of August, not enough energy. So that is interesting. That tells us certain things. So that's where we are. We don't have a 2-day recross. Derivative oscillator still positive. Half-day chart, we can see where things bumped up in the morning, but then moved down in the afternoon. Still not, it hasn't violated the 4-hour, the half-day. That's old habit. The half-day trend line, but we do have a doji, which means lots of indecision. A red one tending down. Price percent oscillator positive, but heading down. Derivative oscillator is losing some upward momentum. So again, we'll continue to watch and see maybe the next 2-day candle, which will represent Thursday and Friday. You might have the opportunity going into the weekend of having a 2-day recross going up. Maybe not. Maybe it's fizzling out. Don't know. We'll wait and see. But that's where we are on the Nasdaq 100. Now we're going to leave stocks, go to 20-year bonds. What do we see there? See bonds down 0.63%. Now again, on the weekly chart, the weekly, we have seen a bounce off now, bounding away. We're going to move our well, you know, we really just can't do that yet because our candle's not drawn as much as I'd like to. Not going to violate my rule. Could I, though, without violating my rule, I could do this. I could move and use, what I'm trying not to do is to use the candle that's still forming. We don't consider candles in full until they form in full. So we don't make trading decisions on candles when they're not complete. The weekly is only 3 days in, but we do have a prior candle and the candle from last week, the last 2 weeks. We have those candles, so we'll draw from those. And again, we see the price percent oscillator pulling away from the red signal line heading down. Derivative oscillator also negative. Red down candle forming 2-day. We see, again, it continuing to, price percent oscillator continuing to move down. It's lost a little bit of that downward angle. Price percent oscillator still heading down. Derivative oscillator gaining downward momentum. Have a solid green candle. Now, that is not an open box green candle, meaning strong up movement. It means a slowdown, as we say in the go down. It is below, right there, following down the 2-day trend line. So we'll continue to watch and see. Now remember, we had that 2-day crossover back on the 11th. And again, things continued down on Wednesday. So we'll see how things go Thursday, Friday. And if we can continue to see down movement, or if we're going to end up violating that 2-day trend line and start moving up, don't know. We'll just continue to watch, see what there is to see there, and look at what happened. We had 1.5 days of up movement and then cranking back over, going down, in the afternoon, well, going down as far as Heikin Ashi candlesticks go, we see a laminated pretty much price percent oscillator, derivative oscillator, still positive, gaining some momentum. That's from those three prior candles. That's where that momentum swing continues to go on the derivative oscillator. So we'll watch and see how things continue to sort out. Of course, we're still in that 2-day recross, or you might have taken, you might have already taken your profits and jumped out. But again, for those of you who are new, at the end of today's video, I'm going to have for you inverse funds, how to make money in your practice trades when markets crash. Now remember, we're not a stock calling service. We're an education firm. We don't give you trading advice. I want you to practice trade with us. Again, study to show yourself approved. Lastly, we go to gold. Gold down for the day, big, 3.16%. Boom! Now we saw gold, of course, hit its high back on the week ending the 7th of August. We then saw a red open box spinning top, lots of indecision, and then so far this week, even more indecision with what is almost a doji. That is our supreme indecision candle. Price percent oscillator, which was just stroking up like crazy for several weeks, is now flat and heading down. Still positive though, derivative oscillator positive, but losing momentum. We go to the 2-day chart, and as we told you to watch for, it has crossed over going down. Now, what does that give you an opportunity to do? Well, it makes it real easy. If you had stayed in past the 2-day violation of the trend line in the red candle that ended on the 11th, representing Monday the 10th and Tuesday the 11th of June, if you stayed in after the red down candle representing Wednesday the 12th and Thursday the 13th, and the violation of the weekly trend line, if you stayed in now that it has finally crossed over on the 2-day and closed with the crossover, then of course, my friends, that is, again, I would be asking, why am I still in this? Now we need to go find our 2-day trend line there. I'm sorry, our 2-day crossover. See if we can put the weekly back in the right place. We need to bring this over. We need to bring, for those of you listening, what we're doing is we're bringing our 2-day vertical crossover. I think I said trend line. We're going to redraw that when we can. But we are going to edit our arrow and put that pointing down. We have now brought over our 2-day vertical crossover, and we are going to, well, we're going to have to redraw that better at a later date as far as the trend line itself on the 2-day chart heading down. We have 2 derivative oscillators heading down. We now have a confirmed crossover heading down with the price percent oscillator crossing the red signal line. So of course, that's sort of the last thing to take you out of gold if you had stayed in it. Now, if we have a 2-day recross going back up in the same direction as the weekly, and it's still going up, well, of course, that would give us a good signal for jumping in to another trade going up on gold. But for right now, gold has topped, has blown off a lot of that steam. And of course, our jumping in point on gold was beautiful. Where was it? It was, let's see, it was back on the 2nd of July during that first week when July kicked in, somewhere at about the 167 mark. And of course, what was the high? If you caught everything, which is very, very hard to do, 194. If you got out today at 182.25 and your jumping in point was 166.72, 167, not bad for you. Not bad at all. Again, the magic of the weekly vertical crossover. And again, the training that you're doing on a daily basis is helping you make decisions as to understand how to follow the trend and specific to each chart that you track and follow. What are the rules you establish from trial and error to help you figure out how best to find the highest topping point you can for the price movement after the weekly vertical crossover? That's where the real training is involved. Hey, we have a special training for you today. I've only launched this a couple of times. It is Secrets for Creating Your Own Virtual Personal Wealth Fund. Everything we talk about here, all the charting, the options training, all the stuff that we do here leads to the creation of a personal wealth fund. We want you to, in the end, be able to set up your own little mini hedge fund that you set up virtually, that you manage, that again, you show that you can do it to yourself. Everything we do here is about practicing until you can do things the right way. It's not about going out there and blowing money looking for tricks. It's not about tricks. It's about doing the work, learning, practice trading, then doing some fractional practicing, that is with a very small amount, $50, $100, seeing what it's like to actually buy a fractional share, say, of GLD, of TLT, of the Qs, of SPY, risking what? Maybe $50, $100. Plenty of online brokers now that will allow you to have a fractional share. Then you get to enter a real trade with a small amount of money, and if you screw up, you lose $10, $20. Okay. You lose $100 if you're a real idiot and you let it all go to nothing. But you get to really practice for real. You get to put in a good till canceled sell order. You get to put in a limited order. You get to, again, experience what it's like to really enter and exit trades. That's some real good practice. And again, I'll put up, you know what I'll do? I'm going to put up at the end of this training also the fractional trading video that we've done to give you a little bit more of a sample of what that is all about. My friends, that's what we have for you today. God bless you. All the best from the whole team at Charting Wealth World Headquarters. If you don't have the book, supercharge your training. Get it. God bless. All the best.